How to select a mutual fund? People usually look at average returns and probably some look at the rolling returns. But there are many important details which an investor should actually look at. So when you look at any mutual fund scheme, it actually publishes something called a fact sheet, and there are other important documents like key information memorandum, right? Where these two documents actually contain the investment objective, strategy, asset allocation, and risks in the you know scheme. So let's just look at different schemes and understand what these usually suggest. I have taken the snips from the key information memorandum and fact sheet for this video answer. So this is a flexi cap fund where the fund manager is saying the return he intends to generate long-term returns, and the minimum time period has to be 5 years and more, right? So somebody, with a lesser horizon, especially what we are observing now is like people are coming with a very short time horizons, and they're expecting a lot of returns out of it, right? And at the same time, if you look at it, he's saying that he intends to invest up to 35% in the foreign equities. Again, here there is there's one good thing about this, and at the same time, there is a flip side as well. Good thing is like if the Indian equities don't do well and if the foreign equities do really well, then it looks like that your portfolio is really very resilient. But the flip side is that if the Indian equities do really well and if the foreign portfolio doesn't do well, then the returns may appear slightly muted, right? So this is something which an investor should be aware of. When he or she is comparing with the returns of the index, he has to be careful and he has to take this factor into consideration. Next, let's just go to the focused fund. So in the focused fund, so if you look at it, he is only investing in 30 companies. So that means this is going to be a really very concentrated portfolio. And what the fund manager is saying is like he endeavors to find the emerging companies in the economy, right? That means these are not yet identified ones. So if you are somebody who is trying to get the emerging trends, then it may take some time, right? For that portfolio to show results. That means if you are again investing in this kind of funds, there is a high chance that there will be underperformance for a considerable number of years, like maybe for the first 3 years or 4 years, and then maybe the fund may start performing, right? So again, it will be a 5 year. Anything less than 5 years would be, maybe it is not suitable for the investor who intends to invest less than 5 years. Then this is a mid cap fund. Here, his strategy is to uncover the companies, which which can grow into a large caps, right? So again, it's a very concentrated and high conviction strategy. So that means for something to grow from a smaller company to into a bigger company, obviously you'll be needing a lot of patience, right? So that way, investors should be willing to hold for a longer duration. And again, if you look at it, he has to invest at least 65% into the mid-cap companies. So this is more of a regulation where anything less than 65, it is not considered a mid-cap scheme actually, right? So, and then next we shall go to the small cap scheme actually. So here, let's look at the risk highlighted by the fund manager himself. This is from the same key information memorandum. So here the fund manager is saying it is highly liquid, right? Trading volumes is the other one which is highlighting. And then there can be a huge amount of volatility. So, you know, so that means like the prices on a single day, it can be like 5%, 6% up or down as well. And these companies are usually very sensitive to the, changing economic conditions. And then he has shared what there is a probability of this companies failing as well. So, and he has shared some reasons, right? So they may be with outdated technology, or else bargaining power may not be good with the suppliers, and the low entry barriers. So when the profit pool is growing, maybe a bigger company can come and uh, compete with them, and all this stuff. Uh, what happens is, since this is a high, there is a high probability of risk, and there is a chance of the capital loss as well, right? An investor who intends to invest in this one should be aware of all these factors, right? If you look at the last 2 years, 3 years, and 4 years, many people have made a huge amounts of money in the small caps. But in the last 45 days, if you look at the market returns, those are the ones which tank the most. That's something this fund manager has highlighted in this key information memorandum long time back. But I don't think any investor would typically look at this stuff, right? They usually look at the returns and they most likely invest. And then the next one is the hybrid funds. So here, this is a conservative hybrid fund. So here, the minimum investment in the debt security is 75%. So that makes this funds like really very stable. And if somebody wants to go for the regular income, right? And since there is some amount of rebalancing involved, probably you will have a, whenever the markets are in a low, the fund manager may take off, let's say 10-15% from the debt securities, and he or she puts in the equity markets. So that way you will be having a slightly higher returns. But again, these returns will be slightly higher than what you earn in the fixed deposit, most likely. But there is a possibility of in the short run, like less than 1 year, 2 years time, because the equities can move in whichever way possible. So that times the return may be slightly lower compared to the fixed deposit. So, but for somebody who can invest, for a slightly longer duration, maybe 3 to 5 years or more, and if they intend to get returns slightly better than a fixed deposit, then probably this is one instrument you may have to you can consider actually, because this will be a lot more stable. You will not see kind of volatilities which you will be seeing in the equity market. And finally, the returns. The reason why I have put an asterisk here is, like, most of the time when you are looking at the SIP, this is something which a fact sheet publishes, right? SIP, if you have invested rupees 10,000 every month. So what is the kind of scheme return and everything, right? This has been there for 25 years, and you are seeing all this stuff, and you want to invest. But if you look at the other aspect which a fact sheet publishes, is the fund manager information. This person is actually managing this fund from January 2023. That is like slightly over 2 years. So all these returns, whatever you are seeing here, cannot be attributed to this person until and unless he is somebody who was part of this team and maybe grew through the ranks and became a fund manager. Then that's a different story. But you can always check these people's background and everything. A lot of data is available. You can see LinkedIn, or else even if you are Googling, you typically receive all their career information and everything. So this is something any investor has to look at, right? And uh, you know, uh, thank you.